London AIM-listed Block Energy has seen its shares rise as much as 238% recently as it backed up its bullish expectations for oil and gas production at its West Rustavi project in Georgia. Paul Haywood is Chief Executive. He joins us now. Paul, welcome. And congratulations, because this rise in shares reflects what you had already said was a bullish outlook for the business. I think investors just needed persuading. But we must also remind investors that this West Rustavi project is just one of three you've got in Georgia. Explain more about what it is you're doing.
Yeah, sure. Well, thanks for having me, first and foremost, Jeremy. So, look, we're obviously AIM listed. We listed on the AIM market June 2018, having raised £5 million to execute what we deem to believe a low-risk development programme, which is what we've just come to the back end of executing, of course. We're a party to 3 production sharing contracts. We've got a 100% working interest in Norio, the Norio oil field, which to date has produced around 2 million barrels of oil. It's currently producing around 60 barrels of oil a day for us. We're a 90% working interest in Satskanesi. We're also the operator of those 2 fields. Satskanesi is producing around 10-15 barrels of oil. So these are, say, the non-core assets, but they're definitely not the primary focus right now. And as you mentioned, West Rustavi, of course, of which we neatly secured an agreement with the previous owner to move to 100% just before drilling 16A, which has been a major success to date, of course. So as your followers may already know, we finished drilling a horizontal well in 16A most recently. We've successfully tested the well, which has come in extremely well for us, of course. So because that's what we'll be focusing on today.
Let me talk a little bit more about some of the numbers, because I think in the context, I think we can put this into some sort of context and extremes, because I think when you went into this, you were talking something like around about 1,200 barrels of oil equivalent a day, I think, ultimately, weren't you? But your project was initially set at, what, 350 barrels a day?
Correct, yeah. I mean, initial production rates forecast both internally and announced to the market were around 325 barrels of oil a day. That was what we were targeting, and even at 325, the project would kick off a significant amount of free cash for us. But you know, as we all know, since our test, we tested it just over 1,200 at a quarter of an inch choke, which is significantly scaling back the well, basically, since then, we've put the well on production on a 1/8 of an inch choke, purely because we're currently experiencing slight capacity issues on how to store our crude and how quickly we can sell our crude in country. I mean, an important point to note is we've pretty much doubled the country's production overnight through this well of 16A, and we've got 3 to 4 more wells behind this that are prepared and ready to go. So it really is an exciting time for the company, and I think that's obviously presented in the share price action over the past couple of weeks, etc.
I want to get back to the share price in just a minute, but I want to get some more detail about this choke size than the choke you're using. In other words, the constriction of the oil that's flowing out of this well. Do you have the capacity to increase that to the maximum choke size? And if so, what sort of delivery would that give us?
So given this is our first well and it's blown expectations, of course, we are, of course, limited by existing production facilities. So we have to produce this thing very carefully. There is most definitely scope to open up the choke size and produce a larger daily rate. But I think even at 700 barrels a day, I mean, that kicks off around $750,000 to $800,000 of free cash for us on a monthly basis, on an annualised basis, over $10 million. Which also offers a payback on this particular well of less than 2 months. So the economics, even at 700 barrels a day, are fantastic. And we don't want to produce things too hard just yet. We've got an additional 3 wells behind this that have been prepared and are exact same play to what we've just drilled. So we'd be expecting very similar results. And once we've got 3 or 4 of these wells under our belt, then we can start playing around with production metrics and exactly how hard or soft we produce these things.
Yeah, one of the other things, of course, I think we referred to very briefly is the capacity you've got in terms of storage. And what about the offtake? What about the increased offtake and the hope for increase in production? Where is all that oil going to go?
Well, currently we're selling domestically. There are 2 domestic refineries, of which pretty much all producers in country provide their crude to, market their crude through, sorry. Since announcing the success of 16AZ, I've been in contact with multiple international traders, some of which are nearby in Turkey, Azerbaijan, etc. And we're negotiating export marketing agreements with those parties. So we're looking at export routes, which is a very simple, straightforward process in Georgia. And we're also looking at potentially gearing up marketing contracts with increasing marketing contracts with local local domestic buyers. So there's a domestic route, which is the path of least resistance for us right now. But as we start to bring more of these wells online, we're going to have to export because, quite simply, the refineries that are located in Georgia just simply aren't geared up to take this sort of levels of production. So
let's talk about your other two assets that you say are side plays at the moment to West Rustavi. What about the potential for those two other assets?
I mean, Norio-Satskanesi, although it's being deemed as somewhat non-core for us right now, I wouldn't say they're non-core, but the potential of the assets is not as large as West Rustavi, albeit we've got a P2 reserve base in Norio-Satskanesi of circa 1.8 million barrels. A contingent resource case is over 38 million barrels. So the prize is there. It's just that West Rustavi has obviously come on very strong for us. We've got an added incentive given the preparation work that we've done previously gearing up into this work program to continue with what's yielded success for us to date. So the focus is most definitely on West Rustavi, but it doesn't mean that Norio-Satskanesi is out of focus. It just means it's going to take a slight backseat to what we're doing in West Rustavi right now. Yeah.
Okay. Well, let's take a look at the share price. I think it's worth analysis because we've got this price that floated, as you said, back in the middle of last year at 4 pence. At its worst, I think it was down at 2.5 pence. We saw this massive rise recently, and in fact, the spike higher on Wednesday, the 17th of April, all the way up to 12.3 pence. Here we are now, again with another rise on this Wednesday trading session to 10.5 pence. What's in the share price here? You've talked about your three assets, but West Rustavi seems to be occupying much of your time. Is that all that's in this price at the moment?
Oh, 100%. And our internal views are, you don't have to take a simple look at our peers, and there aren't many companies on AIM that are producing circa 700 barrels a day or slightly more that are valued as we are today. So we still see there to be plenty of upside in our current price, notwithstanding the fact that we've got multiple wells behind 16A that are immediate analogues to what we've just drilled.
Okay, so the share price at the moment only really includes West Rustavi as to where we are. What's going to bring the other two assets to the attention of investors and investors starting to get interested in terms of buying into the stock for those other two assets?
That's a good question. I think the company's got a plan to drill a sidetrack in Norio, which we'd expect to yield some pretty good results. So that, I think, will help prove the concept and de-risk the play, and therefore add value to the assets. And we've also got additional recompletion targets in Norio, which again will be a low-risk production add program to be deployed across Norio and Satskanesi. So we'll be doing more of the same in Norio and Satskanesi, whilst also drilling a sidetrack in Norio, which we hope will de-risk the play.
So when do you see that happening?
So the recompletions will be kicking off immediately. Again, we have more wells in Norio that have been prepared for recompletion works, and we'll expect to perform the horizontal sidetrack of an existing well, similar to what we've done in West Rustavi, towards the end of this year, if not Q1 the following next year.
Yeah. Okay. Back to your flagship asset, the big producer, West Rustavi. What's in the pipeline now, and what should investors be watching out for in terms of some of the milestones you'll be passing to ensure you're still on track?
Yeah, well, I think the key milestones in West Rustavi, at least over the short term, are formalising the gas sales contract that we've got with a local purchaser supplier. Details of that engagement was announced in and around the test time in which we were testing 16AZ. So that's a significant event for the company. And getting on with the sidetrack of well 38, which was prepared in parallel to drilling 16AZ. Same well, on trend, we're simply just extending our understanding of the reservoir throughout West Rustavi. So an immediate agreement with a gas off-taker and a following sidetrack of 38. So there's lots going on.
Okay, well, it's certainly a stock to watch. But in the meantime, look, Paul, thanks indeed for joining us with an update on what's happening at Block Energy. That's Paul Haywood. He's the Chief Executive of Block.